Well, good morning to some and afternoon to others. We have people from across the country joining us today, including our presenters, with one of them being in sunny Brisbane and Queensland, and the other in the top end, Darwin, and myself here in Perth. So just to let you guys know, this webinar is being recorded for the 41 registrations that we do have, and those that couldn't make it today, given that it is a public holiday, everyone's probably wanting to spend their day out and about with family and friends. So you're not going to miss out. We'll be sending a link post this webinar to everybody to have a listen to. Thank you for joining us, and congratulations on taking the first step to the next step of owning your own home. When bringing a little one into this world, all you want to do is protect and provide them with a safe and secure place. Most of the time, this is providing a place called home that is stable and secure. And we know that it can be really intimidating, confusing, and challenging at times to navigate the world of finance. So that's why we're here to help break it down. So who are we? Veer Finance and Advisory comes with 16 years of experience in banking and finance, working with 40 different lenders across our panel to achieve the right solutions for our clients. We think outside the square, developing bespoke and customized services, blending in our expertise in complex lending solutions and tailored transactional banking with solutions and services that is personalized to individual and business needs. We don't see roadblocks, but roadmaps to get you there. And if it's not today, then when and how? Money DNA, with more than 10 years of experience, Winnie is here to help you serve the world, your families, and you with your great potential and create the ultimate life and financial freedom you deserve. Her unique approach combining intuitive work and proven practical financial strategies, she helps you gain full clarity on your business and personal finances, focusing on creating a better financial outlook and help simplify where your money needs to go so that you can focus on what really matters the most to you. Both Veer Finance and Money DNA aim to build financial knowledge and skills so you can take control of your lives and reach your financial goals with the freedom of choice. All right, so the webinar is going to be an overall 60 minutes. It will be broken up into two different sections, with the first 25 minutes also covering off on the eligibility of government's family home guarantee scheme, the what, the why, the how, and the who. And following that, the next 35 minutes or so, we will uncover various government incentives and concessions that you can access, details of the Super Saver scheme, as well as hints and tips on budgeting to help fast track your home ownership journey. So then we'll have some time for Q&A and any burning questions that you might have. So make sure you do write those questions down. My name is Vorleak Srey. I'm the Director of Veer Finance and Advisory, and I'll be your host for today for the webinar. A little bit about me. I came to Australia at the age of 7 years old with just my mum and I, and no word of English. Mum worked 3 jobs to support us living in government housing and shelters for many years. When I was 14, Mum managed to save and buy the government home that we lived in order to provide us some stability so that we would have to move every couple of years or so. Previous to Veer Finance, I worked with 2 major banks, spending 15 years in private consumer and commercial banking, which is why I'm extremely passionate about helping people find their financial freedom, whatever that might look like for you. Alongside myself, our presenters are Audrey Scheffler and also Winnie Chen-Powell. Hi to Preeti, who just joined us.
Hi, good afternoon. How are you?
Good afternoon. Thanks for joining us.
Thank you for letting me in. My son says hi to everyone.
Hello.
Hi.
All right. So before we get started, I'd just like to acknowledge the Noongar people, the traditional custodians of the land on which we pay our respects to their elders, past and present. I extend that respect to the Aboriginal and Torres Strait Islander people that are here with us today. And as with anything that we do, I just need to let you guys know that this presentation has been prepared as general advice only. The information does not take into consideration the objectives, financial situation, or needs of an individual person. Before making any investment decision, you should consider with an existence of a financial planner, loan consultant, or other professionals whether this is appropriate for you and your personal objectives. So from here, I will hand over to the lovely Audrey Scheffler, finance specialist at Veer Finance.
Hi everyone, thank you all for being here with Vorleak, Winnie and I today. I want to share my gratitude for being able to share this content with you all. This is because this webinar has a more personal meaning for me. Much like Vorleak, growing up, my mum and I lived in housing commission homes, and we often would live in the not so good neighbourhoods because of the housing commission availability and what we can afford. One of the houses we lived in was in a suburb called Vorleak in Darwin in the Northern Territory. Vorleak was considered a bad suburb, even more so now actually. We used to experience break-ins, we had rocks thrown through our windows, and one day I even found cigarette holes burnt in my trampoline. We lived pay to pay and relied on government assistance. I only wish there were government incentives like these that my mum could have accessed when she was renting and bringing me up on one income. When I told my mum about this webinar, she exclaimed, "Oh wow, that would have been great for us when we lived in Vorleak." This government scheme can allow single parents to have stability by owning their own homes, choosing where they want to live rather than relying on what was available and if PIPs were accepted. So let's get started and help you understand the scheme a little better. And remember, there will be an opportunity to ask questions. I'd also like to mention that we will also reach out to you and have a one-on-one session at a time convenient for you if you want to discuss your questions in private. So let's get started. What is the family guarantee? The scheme supports eligible single parents with at least one dependent child in purchasing a family home, regardless of if you are a first home buyer or if you are previous homeowners. The guarantee means that you can access a home loan with as little as a 2% deposit. The scheme is administered by the National Housing Finance and Investment Corporation on behalf of the Australian Government. The National Housing Finance and Incentive Corporation guarantees to a participating lender up to 18% of the property's value, providing the borrower, as mentioned, which is you, to be able to place a minimum of a 2% deposit. The scheme aims to provide single parents with dependents to enter or re-enter the housing market sooner and get out of the rental market, which we can all agree right now is very tough. From 1 July this year, 5,000 family home guarantees will be made available each financial year up until 30th of June 2025. The scheme requirements are separate from the needs of a home loan application. So this means that each person's circumstances differ, and sometimes the bank requires more information before approving a loan. Each lender only has certain allocations, hence one lender might be full, but another might have spots available. This just means that Veer Finance will work closely with you to prepare you for this process and determine which lender suits you to submit your application once you're ready. The family home guarantee can be used to build a new home or purchase an existing home. Investment properties are not supported by the family home guarantee. Applications for the guarantees available under the government scheme can be made directly with us at Veer Finance. We will consult on your behalf with a participating lender and seek independent advice about your particular circumstances, including the home loan process. Eligibility. About you. So to be eligible, you need to be an Australian citizen who is at least 18 years of age, a single parent with at least one dependent. You need to have a taxable income that does not exceed $125,000 per annum for the previous financial year. Something to remember is that child support payments are not included as this income for the purpose of the income cap. So having your tax in order at the time of your application will help the lender determine if you fit the criteria. You must be the only name listed on the loan and the certificate of title, and you must demonstrate that you are the dependent's natural or adoptive parent. So the banks will generally require or ask for a birth certificate at the time of your application to help the lender determine if you fit the criteria. You must intend to be owner-occupiers of the purchased property, which means moving in. About the proposed property. So to be eligible, your proposed home would need to be an existing house, a townhouse, or an apartment. Potentially a house and land package, land and a separate contract to build a home, or an off-the-plan apartment or townhouse that isn't yet built. Remember, for the property to be eligible under the family home guarantee, it must be a residential property, so no commercial properties are allowed. Something else to remember, not all the participating lenders will offer the same home loan products. For example, some lenders may allow you to buy land before entering into a contract with a builder, and in contrast, others may require you to enter a build contract before settling on your land. Another reason it's really important to check with Veer Finance to understand what additional criteria you may need, so we can help you connect with the right lender that suits your circumstances. Here you can see the property price threshold for each family home guarantee and estate. So WA, SA and TAS all have caps at 600K, and you can see that Queensland, Vic and New South Wales caps are pretty high considering the rise in costs to buy in those areas. Territories also have their own separate caps. You can search the postcode of the suburb you intend to buy, and the search engine tool will show you what particular cap falls under your suburb. Following our webinar, we'll send you a link to the search engine tool so you can begin experiencing the different areas and the different caps. If you're considering entering into contracts relating to purchase land and building a home of your own, talk to us about that process first. This is because you may be required under the scheme to sign a fixed price building contract. Any amendments to the agreement after signing may impact your validity of the scheme place. What to take into consideration when purchasing. When you purchase any new home, you need to consider your deposit, your stamp duty fees, the conveyancing fees, and where you are borrowing over 80% of the home value LMI insurance. So what is a deposit? A deposit is a sum payable as a first installment on the purchase of a home or as a pledge for a contract, the balance being payable later. Lenders require deposits for a variety of reasons. A larger deposit generally means that a lender can lend more money. As you know, the family home guarantee supports a 2% deposit. This means that if you're looking to purchase a $350,000 home, your deposit would be $7,000. If you're looking at a home that's $400,000, your deposit would be $8,000. For homes that are of a value of $500,000, you're looking at $10,000 for your 2% deposit. So what is a conveyancer and why do you need one? Conveyancers act as your property lawyer to assist you with the contract, as well as liaise with your lender and loan consultant, which is us, throughout the process to ensure the transfer paperwork and the stamp duties are paid. Conveyancers generally charge between $1,500 and $2,000 per transaction, give or take. So the next insurance we need to take into consideration generally, but not in your circumstances, is lender's mortgage insurance. LMI is an insurance that is basically to cover the bank and not you as the borrower. For any transactions over 80% loan to value ratio, it covers them in the instance that the borrower defaults and the bank has to sell the property, but cannot recoup the full amount owed. LMI is an insurance that will then kick in and pay out the difference to the lender. LMI, again, is not applicable in the family guarantee scheme, saving you tens of thousands of dollars. For example, if the scheme did not exist, LMI at 98% loan to value ratio on a property of $350,000 is actually $12,000. This would generally be an additional cost that you would have to consider, but not in this instance, thankfully. Under the scheme, you do not need to pay this, as the government is guaranteeing the remainder 18% of the full 20% deposit generally required to avoid LMI. So, what does a 2% deposit look like? So let's look at the scenario together. A house, townhouse, or apartment valued at $350,000 by 2% is $7,000. So $7,000 is our deposit. As mentioned, we don't need to pay lender's mortgage insurance under the scheme. So far our expenses are $7K, your 2% deposit, plus the 2K for your conveyancing, worst case scenario. So we're at 9,000 in total, which is how many weeks of rent these days. If you're paying $450 a week in rent, it will take you approximately 20 weeks to spend 9,000K. So in terms of a longer term benefit, you can either have a deposit for your very own home or have accommodation for 20 weeks. It's a bit of a no-brainer. 20 weeks is 4.5 months. That's not very long when you think about our lifespan. So ask yourself this: could you stay with family or mum and dad for a few months, or some friends to work toward the bigger picture if you needed to? Or what is the game plan to get your deposit? So the next expense that we haven't spoken about yet is stamp duty. Each state has different policies and legislation around stamp duty costs. For example, in Queensland, where Winnie is, if you purchase a home for $350K as a first home buyer, there are no stamp duty costs on new or existing homes, which means you literally just need 9K deposit, like we mentioned. How achievable is that? Some of the concessions and exemptions may benefit first home buyers, buyers of low value properties, off the plan or new builds, and other circumstances which will relate to each individual person. Stamp duty is decided by each state or territory and is not a federal government incentive. So rates and exemptions vary from state to state. All states have different methods of calculating stamp duty, so the amount will be different also. We can help you determine what stamp duty would apply to your property and go through what types of properties don't attract stamp duty. Veer Finance can work with you to give you scenarios on the different options available to you, and we truly are passionate about helping you to achieve your goal of owning your very own home. Which brings us to stamp duties concession by state. Most states currently have stamp duty concessions in place, which is great news. And all the states except the ACT are offering government grants, which range from 10 to 30K. That's thousands of dollars towards your new home. As you can see, there are many variables and different things to take into account when considering the Family Home Guarantee Scheme and whether or not you qualify. Hence, it's really important to seek advice and support from loan specialists like us at Veer Finance, who can help you navigate through it all. There are only 5,000 spots yearly, hence understanding and planning to secure your spot is important. Veer Finance can work with you to determine what concessions and grants you may be eligible for and prepare you to be on the Family Home Guarantee or to prepare you to be Family Home Guarantee ready. Thank you all so much for taking this time for yourself today, and I hope this information helps you to take the next step and to know that you are not alone in this process. Back to you, Vorleak.
Oh, thanks, Audrey, for sharing something so personal about yourself when you're growing up with your mum. It really just puts it into perspective, doesn't it, when you gave us an example of only needing $9,000 to actually getting into your first home, depending on your situation. But yeah, to give you guys an example, it's very, very achievable when you put it down to those types of numbers. But as an example of a real life customer that we've been able to help in the past, Rachel is a single mum to Marley, who's now almost 2 years old. She was employed full-time on about $70,000 a year and had a car loan of $8,000, had 2 credit cards, and was paying rent of about $400 a week. This was probably about 18 months ago when, through the height of COVID, rental prices were really increasing, such high demand. So her landlord was going to increase her rent to $450 a week, only on a 2-bedroom, 1-bathroom villa. And Rachel came and sought our assistance, expressing her worries of further rent rises and the ability to continue to provide security and stability for her child. So at the time, Rachel couldn't afford a loan due to the car loan repayments she had and also the multiple credit cards that she had maxed out. Rachel and I discussed what was needed in order to get the loan approved in terms of being able to save $10,000, closing at least 1 credit card off in full, and looking at reducing the car loan to a certain level. This is when she saw Winnie to get a plan into place, and she worked with Winnie for about 6 months in order to put a budget into place, consolidate the loans, and actually was able to pay out a credit card and also the car loan within the 6 months' time on the income that she had. So post all of that, Rachel actually bought herself a 3-bedroom, 2-bathroom townhouse in August last year. The property is now worth $460,000, which is an extra $60,000 on top of what she paid for within a year's time. And Rachel's now on the path to, and still continuing to work with Winnie to save with the added equity that she's got in the property to purchase another small investment for herself and her daughter Marley. So it just goes to show that, with a bit of planning and thought and processes, you might not feel that you're not there now, but when is it? When can we get you there? And how can we get you there through this journey? So I'm sure there's going to be some questions throughout that last topic that Audrey presented. Just remember, write it all down because we will have a Q&A post all of this. But for now, I'd like to hand over to Winnie to cover off on the government incentives, super saver scheme, and the hints and tips of budgeting to get you there faster.
Thanks, Veer. Well, we learned up to now about Family Home Guarantee Scheme, and I'm sure that you're pretty excited about this, right? Obviously, not all the schemes and concessions are going to apply for everybody, but at least you take a first step to have some understanding about some alternative options out there. So well done. Then the next question is how? How am I going to save enough for the deposit? Well, in the next 20 minutes, I'm going to show you 3 tips to help you fast track your saving. COVID really shook our lives in so many ways, and we all are collectively feeling the pain with high cost of living, high interest rate, high inflation, yet the only thing that didn't really change is our salary, sadly. And because of all this, bad news is many Australian families were going to have to sell their family homes due to being unable to manage their high commitment. Good news for you, though, is because so many houses are there in the market, it will be a great time for you to start searching around for your ideal home. Now, in order for you to get into an ideal home, whether you are saving or even in the future, when you're starting to make loan repayment, you need to know how to manage your money well. And money management is a lifetime skill that everyone should have. I couldn't stress how important that is. And it's more than ever that you need to know how to manage, how to save, and how to make your money work harder for you, not the other way around. So my question to you is, be honest with yourself. Does the way you manage money currently work for you? If it does, then great job. I have no doubts that you're going to do well. But if the way that you're managing your money causing you worries, stress, unable to pay bills on time, or unable to save, it is time for you to change. As Einstein said, insanity is doing the same thing over and over again and expect different results. It's just not going to work. So my goal today is to share with you 3 tips to fast track your goals and also get you into your dream home within the next 12 months. Some people will say that 12 months, are you sure? Is it possible? Well, all I can say is nothing is impossible, and it just needs some strategies in place. Like many as you, I don't really have a rich dad. I'm certainly not born in a crazy rich Asian family, but I figured out the most important lessons in life with money and helped me accumulate more than 10 times net assets in the last 10 years. As V mentioned earlier, my name is Winnie, and I am an intuitive business money coach. And some clients, they even call me Dream Maker. So I am a founder of the Money DNA as well. My greatest passion in life is actually help people to be financially independent, especially for female, and achieve financial freedom. In the last 10 years, I work in financial services in different roles, like certified financial planners, business bankers, and also money coach. And I combine all this into Money DNA. And I have helped hundreds and hundreds of people achieve their financial goals. I also published a book in 5 countries. But I have to say that one of the biggest achievements I have, which was also the most painful experience is to pay off $100,000 business debt in 18 months when I was 31. So believe me, when I say that I know how you are going, it's because I'm been there and I can certainly help you to get to where you want to be. And these days, I'm based in Brisbane with my husband and stepson, but I'm still continue coaching and training coaches worldwide to help more people achieve their financial goals. So 3 things we are going to cover today is we're going to start from within. How can we create an unbeatable, abundant mindset, I said? And then after that, we're going to go outward to practicality. How can we manage our money well? Then last but not the least, utilize some available tools out there. In this case, it's going to be aware of government first home super saver schemes to achieve our goals. Now, this is going to be a complex subject and it can't be understood fully in 20 minutes, but I'm happy to chat with you afterwards to give you some ideas. And as a disclaimer I mentioned earlier, it is general advice only. So please contact financial advisors for your specific needs. All right, let's start with a couple of myths. First myth is, you might think, I've been doing on my own and with my money for a very long time. I can handle my money well, and I don't really need to work or have someone to help me. As we mentioned before, if the way that you manage money serves you, that's great. It's only when you are doing the same thing and expect different results, that's the problem. So you might think that, why are we doing what we're doing, really? Because you probably learned how to manage your money through your parents, through the experience you had in your childhood or early adulthood. And that's the only way you do with your money. So if you learn that money doesn't grow on trees, then you probably think that the only way to earn money is by working really hard. If you learn that men are the breadwinners and women are the nesters, you're more than likely to get into a relationship that men are the one to earn and to manage money. If you learn that money causes conflicts and arguments from your childhood, chances for you to be comfortable with money is very slim. And if you learn that money causes stress in life from your parents, you probably will feel the same way too. So all of this is because this is what you believe, and that forms your money mindset. So let's give you a little bit of example. Have you ever tried to lose weight? I'm sure that pretty much everyone in the room have a little bit of experience like that. So let's say, so when we think about losing weight or trying to be fit, the very first couple of things that we can think of is either, we are going to do some exercise, so hit the gym right away, or trying to control our diet, right? So let's say that you're thinking, okay, I'm going to lose weight by controlling my diet. Have you noticed that when you are thinking about controlling your diet, the more you think about controlling your diet and reducing the food you eat, the more you think about food. Why? Because the brain can't recognize the difference of what you want and what you don't want. The only thing that they can recognize is what you think. So the more you think, the more you attract. The more the food you don't really want, the more food you are going to think of. So if you constantly think about, it's too hard. I don't have enough. I can't save. I shouldn't spend. I'm stressed. It's too expensive. I'm trapped. The more you think about this, the more it becomes your reality. Because you will force those thoughts into your brain. And those money mindsets that we just said earlier are once again hardwired into your brain. So what should you do then? The very first thing that you need to do is to be aware. Be aware of what you're thinking, those thoughts, those emotions, those dialogues in your head. Are you more into scarcity mindset or the abundance mindset? So let's have a look with the scarcity mindset then. The scarcity mindsets are the ones that are more focusing on the past. What has done in the past to you probably sometimes is going to be a little bit painful. Something that people might say to you that you're never going to make it, or, I'm doomed. those kind of self-fulfilling prophecy. You're constantly feeling lack or worried or stressed. You focus on the problem about the debt or not getting enough. And then also some negative thoughts that you have, like, I don't have money. I'm never going to have enough. I'm not good at money. I'm always have others to manage my money, and I don't deserve to have that. And those negative thoughts are the ones to hold you back and sabotage yourself. Do you think that that will serve you to save money to get to your home? Probably not. So the next thing is try to change the narrative in your head and shift it to an abundance mindset, as I call it. So when you are having an abundant mindset, the way that you think is going to be completely different. So instead of thinking the past, you actually is looking at the present and the future. Instead of thinking about problems, you are thinking about resources and also possibilities, the abundance that you are going to have, and also all the flows that you are going to attract. You are thinking about some words as like, instead of how am I going to, the questions or the problems you have, you're starting to use the word, which is a very powerful word, how. How can I generate more money? Show me how to save more money. Money is just a tool to bring the security and peace in my family, and I am in control. Those are words that you can use to really empower yourself to do what you want to do. So the first thing that you are going to do is, by knowing about this, start being aware of your thoughts, and also being, if you are constantly having a feeling of lack and scared and worried, or even stressed, or living in that survival mode, then try to shift this sabotaging scarcity mindset into abundance mindset. Another thing is our emotion creates chemical in our body. So if you're constantly having stress or worries, that is going to really toxin your body. So learn how to regulate your emotions and don't let stress and worries play in your driving seat. And that leads me to the second myth. If I need to save money, I should just cut down all my expenses, right? Well, cutting down some expenses is really necessary, but you don't really need to cut down everything. Because as what we said before, if you constantly stay in a survival mode, which is how am I going to survive? Or where am I going to come up with the next meal or rent? Then you will constantly stress about situation, hence inactivate your thinking brain to come up with a solution and resources. So what you need to do is be mindful about how you manage your money. So what do I mean by that? You can start to know how your money comes and how your money goes. And also starting up a budget for your life. Some people are starting to think about budget and just so depleting or so hard to do. It is actually quite not. I'm going to give you a little bit of a different way of thinking. So most people are paying bills when they come and it can, if they can. Money comes and money goes. And now, since most people are using credit cards or direct debits, well, let's track on how things goes. So again, money comes, money goes. And if I have a little bit of leftover, that's great. If not, oh, well, let's do it later then. No one is going to force me to do anything. And those big dreams are going to be far-fetched. So that's okay. Don't tell anybody. Without the sense of directions or a sense of control, it is just so hard to live beyond your current stage. So I saw someone have a big smile about the budget, right? So why do we need to set budget then? It is because instead of being controlled by the upcoming bills and payments, you are now taking control of your life and your money. That's what budget is. Budget is to tell your money where to go rather than being controlled by it. Simple as that. But by shifting the thoughts about that, all of a sudden you are giving yourself the power, the control about yourself, about your life. So how can we do it? If you like, you can also take a snapshot of this. And like Veer mentioned earlier, we are going to also send you a link with that so that you can review it. But the first thing I will say that is to gather all the records to know your money in and money out. meaning know how much you earn and how much you spend. And if there is any left over, that'll be great. If there is any shortfall, then we have to review that. Okay, so that's going to be the very first thing. Second thing you need to do is to start to look at all the expenses and try to categorize all the expenses into 3 buckets as shown here. One is going to be the essential on the left. The middle one is going to be a build wealth. And the third part is the fun stuff. So essentials, who are they? They are the ones that you can't really live without. You know, the shelter that we need to have, the food, and also the transportation, medication, kids' education, insurance, all those things in childcare. Those are the essentials. Those are the things that is going to keep you survive in this universe. The second one is the build wealth. Build wealth are the ones that you are going to have a little bit left over. Now you are going to put it aside in your saving or your piggy bank. Or maybe you are going to start to save a little bit for your kids' education. Or you have a little bit left over and then you put additional fund into your debt reduction so that you can pay debt earlier. It could be also your investment or even your superannuation or other retirement funds. Now, the third part is the fun stuff. Fun stuffs are the, there is one term that I use is emotional expenses. Emotional expenses is when we are feeling low or very, or dragged or feeling down or self-doubt. Those are the times that we're feeling that we need to have some gratification from other things, like from shopping, overindulging with food or alcohol or any other things. I might die out because I'm tired. I might have someone to deliver for things, or I'm not really comfortable with my own look, so I'm going to get into the beautician visit or the training. There are so many different types of emotions, expenses that is going to be involved. The next one is the loose ends. Loose ends are the ones that you probably is going to have a little bit of snacks. I remember when I was working in the bank, they were so stressful. So I remember every time after lunch, even though I didn't really want to, I still go to a convenience shop to get 2 chocolate bars just because I can. Or, you know, sometimes I go to weekend markets and without needing anything, I still buy a little bit of souvenir. I might go to a jewelry box or any other things to get some accessories, or maybe taking the kids to a swim class and then we have ice cream together. Those are the loose ends that you can actually control. The last one is the fun events. Fun events could be a kid's birthday party, which we should celebrate. The weddings, the holidays, or other kids or other people's birthdays or Christmas. So those are things that you need to categorize into. Now, the third one is you look at those 3. Are they under control or off balanced? When I say under control or off balance is, you can also look at the percentage here. In order for us to survive, you need to try to manage all the essential expenses is under 60%. And the fun stuff ideally should be under 20%. So think about that. And also this is probably going to be your homework today, is to really understand about how you are spending right now. Now, the third step is to plan and adjust the top 3 items in the categories. This is when you are going to look at all the expenses and just thought, gee, okay, this is actually a little bit way out of control with my fun stuff. Or why am I spending so much with my debt? Or why am I spending so much on my utility? So let's look at the essential first. With the essential needs, as I said, they are the ones that you can't live without. So you still need to have it anyway. But how about doing a little bit of comparison or review with other service providers to see if you can get a better deal? Or if you have too much debt at the moment, that's probably also one of the things that you need to first, it's going to be a first thing that you need to tackle, because those are money that you're going to give away without coming back. It's not investment at all. What about the fun stuff then? Fun stuff are the ones that you're going to probably, like I said, get into a routine or the habit on grabbing a snack or the third coffee before kids' school pickup, or even giving your child an ice cream after swim lessons, or going out with friends and binge drinking when you don't have your child around. Those fun stuff category, definitely fun, but it is a kill deal for saving. So that will be the area that you need to work on. So the second tip that we just discussed is to really be mindful of your money flow. Money in, money out. It has to be a healthy flow. Be aware of your expenses and also do what you can to pay down consumer debt as soon as possible, especially when our interest rate is increasing. I can't stress how important it is to pay down our consumer debts, which including personal debt, car loan, and also credit cards. And also be sensible with your emotional expenses. We all have our emotions. We all have our emotional expenses, but it has to be moderate and also looks expenses. Next thing is, of course, set a budget. You don't really need to tighten up everything, but every item should have a budget in place. Also, a very useful tips that I share with my clients is to force yourself to save. Meaning, whenever you are going to spend, you are going to also force yourself to save a certain percentage. For example, if you are going to have a latte, that probably is going to cost you $4.50. What you can also do is every time when you spend on latte, you are going to also put 50% aside into your saving. So what you do is you are forcing yourself and automatically start saving while you're spending. You can do it that as a daily basis or a weekly basis. It's all up to you. But there are also some banks and apps can also help you out with that too. And that leads to our myth number 3. I'm a single parent. I just don't really have too much of resources out there. The truth is resources are everywhere. It depends on where and how you get the information. Knowledge is power, and use a scheme like this, like the government provided, will fast track your dream. So tip number 3 is to really know about your first home super saver scheme. Now, I'm conscious about the time today. I can only briefly explain about the scheme. I'm not going to go through the full thing because it's just too many things. I know it's mind-blowing. But as I said, I'm happy to have a chat with you around that afterwards. So if I'm going to have a simple term to explain about this, it is that starting from 1st July 2017, instead of putting your saving aside into your saving account, you now have an option to put your saving into your super fund. Now, you might think that, why do I need to put it into the super fund? Well, superannuation itself is a tax structure, really. Just like, we go to earn some money, we have to pay some individual our tax return. Family trust and company structures, they are all different tax structure only. So each tax structures provide some pros and cons. And by using super to save, you take the benefit of super tax, which is 15% only, rather than your individual tax. It could be 19% up to 47.5%, which is huge difference. And it depends on your income. Also, superannuation is designed to be used for your retirement. So there are some restrictions on taking out the money from it. So by using super to save, you are forcing yourself to save into a place that you are hardly to access, which in a way serves the purpose of some people if you are lack of self-discipline. And once you save up and ready to purchase, you can take out up to $15,000 in each financial year from 1st August 2018, or 50% in total. So who can apply for this? You are only eligible if you are over 18 and if you didn't own any property in Australia before and didn't have already applied to release money under First Home Super Savings Scheme. So back to what Audrey said earlier, with the home scheme, home savings scheme, that's for the single parents part, which will allow you to save up to 2%. But if you are planning to use the First Home Super Saver Scheme, It is only allow you if you are going to apply for the home, if you are the first home buyer. Now, other things that you need to know is home must be located in Australia, and you will also occupy the premises when you buy and intend to as soon as possible. You also intend to occupy the property at least 6 months within the first 12 months you own it, because our circumstances may change. You may also end up into a relationship after that, but that's okay. As long as you are going to also live the 6 months within the first 12 months, that should be okay. One thing you also need to be considered is if you have any outstanding ATO debt or any other debts, those amount released will be offset. You have also 12 months from the date you make a valid release request to notify ATO when you are signing a contract. Now, if you decided to go to this path and utilize your super funds to save up for your home deposit, the process is going to be like this. The very first thing you need to do is actually contact your super funds to see if they are qualified and also they are going to release the fund for you. Not all is like that, just the same as the lender that we mentioned before. Second thing is, once you confirm that your super fund is going to allow you to have this super saver, then you start saving. Now, I will touch on with what sort of saving that you can do so that you can withdraw. There's no point for you to save into something that you can't really withdraw for this purpose. Once you save up enough, the next thing is you're going to get into your MyGov. And if you have any questions, try to get onto MyGov account. I'm sure that most people know how to do it. And then go to the ATO portal. Under the ATO portal, you should be able to find super. And then from super, you should be able to see First Home Saver Scheme. From there, you are going to be able to see the request and First Home Saver Scheme determination. And then you can send the request to ask them how much total have I already saved and am I going to be able to withdraw. Once you agree with that, that leads to the next step is to make a request to withdraw your money. That's pretty simple and straightforward. Now, I'm not going to talk about this one, which is going to be a quite simple understanding about how super works. If you are interested in that, we can also talk about that when we are having our one-on-one chat. So earlier we talked about the saving. So what sort of saving are you going to have then? The savings are going to be in two criteria. One is going to be the pre-tax contribution. And the other one is going to be the blue arrow, the after-tax contribution. So let's look at the pre-tax contribution then. Pre-tax contribution is, most people are working for other people. So we have the employment contribution, right? And those are the money going to your super fund. That's the pre-tax contribution. Another one that we also know is some people may do the salary sacrifice. So salary sacrifice are either regular contribution or lump sum, and they are the pre-tax contribution. Now, once you are going to make this pre-tax contribution, you will be able to take out up to 85% of it. Another one is the after-tax contribution, meaning that after you receive the take-home money and then you pay for all the bills and everything, you put your saving back to super fund. Now, if you do that, once you are going to save up enough, you can actually take out 100% of this portion, which is your after-tax contribution out. So only these two saving are going to be qualified for your super saver. Here, I also list out a couple of things as a contribution. It won't be considered as a arrow sign here. Some is earlier we mentioned about the employer contribution, which is a superannuation guarantee contributions. Some people received spouse contribution that's not going to be qualified. And also some people may have the splitting arrangement or government contribution, or even for the personal injury, those are not going to be considered in our super saving. Okay, so that leads to the next one is now you're safe enough. What are you going to do? You are going to start to request for the release super saving, right? So what you are going to do is, earlier we mentioned, check on your super fund and see if they are going to release the money, and also if there is going to be any fees. most of the super funds are going to charge you with certain fees, including if you have some insurance in place, they probably is going to withdraw that. So don't expect that it's going to be a total amount that is going to be. And another thing is also check your super funds to know if your current contact details are going to be correct. If there's anything that you are going to have once you receive this super saving account is your tax, because it is going to be the fund coming to your pocket. So that will also pump up your individual income that year, and it will affect your tax that year. So there are a couple of things that you need to consider. And also with the financial hardship provision, which is some other schemes that we can also touch on later. Now, if you already confirm about your super funds that it can release the money, then you got to get into, earlier we said, the third step. Go to your MyGov in the ATO portal and lodge the request for the first home super saver determination. With the determination, basically it's meaning that now you are sending the ATO and also the super fund to determine how much you can get from this. And then they will give you a total amount of that. And once you agreed, then you can apply to the fourth one, which is release. So if you plan to use this scheme, timing is really important, and you have to save up enough first because you can only apply for that once in your lifetime. So first thing is to make sure that you are going to have enough and also apply for ATO portal for the determination. Then you can, if you plan to sign a contract to purchase property, you can now sign a contract to purchase a property now. And once agreed with the amount, then you can request to release the amount within 14 days of entering that contract. And again, I know this is quite complex, and that's why many people don't really like to talk about super or find it's a little bit too hard. I totally get that. Before I was a certified financial planners, I also think that this is just crazy. But don't worry, if we got the time, I'm happy to also explain that to you and also discuss this with you as well. So we cover a few things today in our portion, and I hope this is going to help you a little bit having some understanding about how you are going to fast track your saving. Everyone's situation is quite different, and there's no one size fits all solution, and I'm certainly here for you. So if you'd like to work with me as part of our process to fast track your saving, there are two ways that we can work together. Time is money. As we said, there's only 5,000 slots for the single parent scheme. So we need to really act quick. One way I can help out is to just work out a way to save efficiently. Then you can start to do the rest yourself. This is for someone who already have halfway or nearly there to save enough for deposit. Then I can just come up with, give you some last push. I'll evaluate your situation and also work out an action plan for you. Explain how it's going to work, and then you are going to apply for it yourself. Another way is accelerate saving plan. That is, if you have no clue or don't really know where to start, or just simply start saving, then or some people probably need someone to hold you accountable or hold your hands along the way. Then this one is probably ideal for you. And I will evaluate your situation, work out the action plan, explain how it works, and then we'll catch up every month to see if we are going to head into the right direction. I also enclose the 2 QR codes on each of the plans, so you can also scan on that if you are interested in this. The total investment for your future is as little as $30 per week to start with. And, $30 per week is actually less than 1 Uber meal. So the time starts now, and let's start working together and get you and your little ones into your home soon. And you can look into this seat as much as you can, or if you have any questions, I'm happy to also answer you afterwards. Now, these are a few clients that also share their stories. The first one here is Emily. She is a single mom, and with all the work that she's doing, she just feels like it's too much and too overwhelming to deal with her own finance. So what we do is work out a plan for her, and then after that, within 3 months, we save up $1,200 for her down payment. Another lady that I work with, she just found that it's so hard for her to even have a self-discipline on spending. So what we do is we actually diving into her expenses and also her habits. And within 3 months, we save up $2,500 for her Bali trip. There are a couple more questions and also a couple more examples that I can share with you. But due to the time, there are so many things that we can also discuss and also explore. So I hope that it's going to give you some ideas about saving. Thank you. And now back to Vorleak.
Thanks, Winnie. That was really, really informative. And I'm sure there was a lot of information there that people can take away from. So once more, this webinar is recorded, which means that if there's anything that you wanted to listen to again as part of Winnie's presentation, you can go back, get some more information. But sometimes it just takes a little bit of hand-holding and guidance to get you to where you need to be. So just to recap, just because we've had so much information being pulled through by everybody. In the last 60 minutes or so now, we've just covered off on the eligibility criteria for the Home Family Guarantee Scheme and only needing 2% deposit to purchase a home. And then Winnie covered off on government concessions, such as the First Home Super Saver Scheme. So another added way and benefit to get you in there faster by utilising your super, and also hints and tips on how to save and budgeting to fast track your savings. So I guess the most important part from here is, what do you do with all this information? A bit similar to saying it's not about how much money you make, but what you actually do with it. So from here, to get you guys all home loan ready, everyone's situation is different. Hence, it's really important to seek the right advice and support to assess your situation and ensure you meet the eligibility criteria. If it's not now, then when and how do you get there? That might look like a debt consolidation of existing credit cards or personal loans, or just helping you save to get you that little bit extra in terms of like $2,000 or $5,000 more that you might need. The debt consolidation piece and debt negotiation piece could also form part of your serviceability to make you eligible for the loan application. And by putting a savings plan in place, you might just be shy of just an overall small deposit required, right? From here onwards, once we've consolidated everything and understand your personal situation, that's when you can start applying for the scheme. Okay, so before we close off, I'm sure there might be some questions from people, from anybody. Is there any questions at all that you'd like to ask now?
Veer, I think that Pretty probably have some questions for us.
Okay, yeah. Pretty still
can you hear me?
online?
Yes, I do have a question. Thank you for giving me a chance to talk.
No worries.
Yeah, I do have a question. Like, I have little savings in my account, but the thing is that because I'm working on a casual basis, it's a permanent casual basis, and I'm working like 70 hours fortnightly. And but the thing is that the organization hired me on a casual basis. So when I went to the bank, asked for the loan, and they told me that you are not eligible because you are working on a casual basis. So I do have the question, like, I have little amount with me, I do have savings, I'm a citizen here, but still, how can I like to have a home? So because I applied jobs, but still, it's very hard in Sydney. That's why. So am I really eligible to buy a home or no?
Yeah, so it's a really good question, Preeti, and thank you for speaking up and asking that question and letting us know what your personal situation is. So casual income can be considered. It is very dependent on which lender you go to, and this is why we say that different banks have different policies.
Yeah.
So generally with casual income, you have to be at least within the same employer and doing that role for a minimum of 6 months. before that income is considered. Now, some banks will say 12 months. Yeah, so it depends which lender you spoke to, and how they assess the income is through your year to date. They average it out. So to give you an example, if in the last financial year in FY22, your year to date in terms of your ATO tax ready statement said that you earned 80,000, that's what they will use to assess in terms of your income to service and support the loan application that you're after. So it sounds like you're pretty much almost ready in terms of being able to get into your own home, because, you know, you said that you've got your savings, you're working. It's just that when you went and spoke to the bank, they said they couldn't consider your income. Yeah. So have you been in your job for, 6 months at least as a minimum?
It's more than 6 months, like 9 months now, with the organization where I work. My weekly income is after tax is like 1,800 to 2,000. And another thing is that I got excess pay, like tax-free amount. 15,000 my organization gave us a tax-free.
Yeah.
So but the SNAP bank, they told me that because you are a single parent and dependent one child, and that's why you are not eligible to buy a home. Really heartbreaking for me, but still I keep a hope in my mind and my heart to have my own home, but I don't know where to start, where to go, how can I find, so I need little guidance with all this stuff. So,
Yeah. Preeti, we would absolutely love to help, and I'll reach out to you post the webinar. But from what you've told me, there shouldn't be any issues. I mean, if you're saying your income is around about 1,800 weekly after tax, plus you also get tax-free as well. I'm assuming you're working in, say, non-for-profit or healthcare or something like that, where there's
community work.
Yeah. So there's salary sacrifice incentives that's available up to about 16,000 per annum, which actually is an added benefit. So the National Australia Bank does have a very strict policy on casual income. It must be minimum 12 months. Whereas the likes of, say, Bank West, for example, Bank of Queensland, they're tier 2 lenders still owned by the major banks, but they do allow casual income of minimum of 6 months only. So in that scenario, you'd be eligible to go and seek, the grant through those guys. CBA is another one, and they're also a participating lender of the first home family guarantee scheme. But I think you're almost there, so we'll definitely reach out to you post this webinar to have a deeper conversation on how we can help.
Yeah, of course. It's like in my condition as a single parent, is for the children, it's very, very compulsory. We have a safe and secure place where we can, stay. That's why, I really need your guidance.
Yeah, absolutely. Yeah, and we're very excited to help you through this.
Thank you so much appreciate.
No problems at all. Does anybody else have any questions at all?
Yeah, V, I think that Desiree also have a question here.
Sure.
So Desiree, can you hear me? And am I reading your name right?
Desiree's got her hand up. She might be on mute, or
let me just have a look.
Okay. Desiree's got I'm on mute.
Yeah. Can you give it a go again? I think that you already unmute yourself. I can hear a little bit background. Not really sure if it's from us.
Maybe Desiree.
Maybe you could type your question, Desiree.
Yeah. Okay, it's not working. That's all right. We can wait for you typing. No pressure.
Yeah, we'll wait for you to type in your question, Desiree. Is anybody else that has any questions that you might want to throw at us?
I don't have a question, B, but I just wanted to say that last week when I was in Perth, I actually jumped on the ATO portal and checked my super saver scheme. And I actually had like $15,000 there that I didn't know that
There
I
you
could actually
go.
pull out.
Wow.
Yeah, so when I used to work for the government, it was mandatory that we would put additional contributions through. So at the time, I wasn't happy about that, but now I am, because yeah, it's given me a bit of a kickstart if I was to ever go through this process.
Yeah, amazing. Yeah.
Mm.
You'll just need the extra 3% as a first home buyer, so 5%.
Yeah.
So I guess that with that instance, the best way for us to do is actually just check your super funds through the ATO. You might be surprised that you got a little bit of early Christmas gift from
there's
that.
something already there.
So Desiree, can I just ask with your questions, because I was just responding to Desiree earlier, and she said that she would like us to give her a call. So is it regarding with the savings side or for the lending side, so that either V, Audrey, or I can give you a call? So what will be your questions referring to? Savings side. Oh, well, in that case, that's my territory. I can definitely give you a call and I have a chat. That's not a problem. I also noticed that you had a booking for this Saturday. Can you contact me after the webinar, please? Okay, I can.
Yes, tomorrow.
Okay, tomorrow. Are you referring for the home scheme side or the savings side?
Hi, this would be for both.
Okay, cool.
I've got a good savings already, or small savings really, but I would like to make sure I can have my savings work properly and get into buying my own home sooner rather than later.
Oh, lovely.
Sounds good.
So we can both contact you tomorrow. Vorleak and I will do the scheme side, and Winnie will contact you about the savings side. But it sounds like you've already got started, which is amazing.
Okay, so I think that what we can do is thank you very much for all the participants, and at the same time, when you registered, you actually provide your contact detail that will allow us to contact you afterwards. And I think that everyone's situation is different, as we say along the way, and we're more than happy to chat with you. So what we would do is V or Audrey and I are going to give you a call. And as you know that our expertise may be different. So when we reach out to you, we may be able to give you some guidance. But if we notify that there may be something that maybe the other party will be able to give you a clear idea, then we'll also ask the other person to contact you, if that's okay.
So in the interest of time, I think we might call it from here. Once again, thank you to everybody that attended today. Given it is a public holiday, acknowledging it is the Queen's Memorial Day as well. You know, you guys are definitely heading into the right direction of owning your own home and taking that step forward. We've said it again and again, an email link will be sent out post all of this. So for those that have missed it, or you do want to re-listen again, just click into the link and listen and pause at any part that you want to take more notes of. But we will be reaching out to each and every one of you for more personalized conversation, so we can get you into that home faster. And Preeti, I saw your message come through. Definitely, we're more than happy to help you, guide you through the process of all of this, and we're super excited to do so. It's definitely the passion that we've got, and this is why we're doing it. But yeah, thank you very much for joining us today, and we touch base with you guys all soon. Enjoy the rest of your day.
Thank you. Bye.
Bye.
Thank you so much. Bye for now.
You're so
Bye.
welcome.
Bye,
Bye.
everyone.
Thank you.
Thank you.
Bye. Bye tomorrow.
All right.
Is it just us now?
Yeah, I think
Okay.
that's it.
Well, I think that turned out well.
Yeah.
Yeah, it's good.
We're still recording.
I just stopped.
Oh,
Oh,
cool.
cool.
End up sending that to the participants. No, that was really good.